Thank you very much. I think we've got a really great panel today. Also at the top end of the alphabet, which is nice. So we've got, as the screen shows you, we've got Ali Maitland from Capitalise. So he is one of the co-founders, but also our head of product. But he's quite wise in all areas. And then Ainsley from Clarity, I will let him explain Clarity, but Ainsley's also an accountant by background. And then on the bottom here, we've got David and Nick from Citrus and Escalate, which, correct me if I'm wrong, David, are you also an accountant or a lawyer by background?
No, I was an accountant many years ago, but I haven't practiced in decades. So
right. And Nick is a lawyer by background, but I'll hand it over. Yeah. And I'll hand it over to Ollie to sort of maybe share a few more useful pieces of information. But if you need a bit of, sunshine or banter, just let me know in the chat and I'll try to bring some colour to your morning.
Cool, thanks, Adriana. So we've got a bit of a packed agenda today. So we're going to whistle through kind of 4 different key areas. Firstly, we'll be hearing from Citrus, looking at different employment concerns. So many of these things happen offline and are not necessarily that visible when it comes to the app ecosystem. So we are a user of Citrus and have found David's company to be a great help when navigating these times as well. So we're hearing about David on the employment concerns, and then with Escalate, we'll be hearing about how to tackle SME concerns, not necessarily related to funding, but also looking at disputes, which obviously may be on the rise at the moment. I'll share the latest updates on the lender community and also a bit from CBILS as well, before we hear from Ainsley about how to actually get to these things out to your clients and how to manage all this overload within your firm. So thank you everybody for joining. I'll kick off first and just give me a little nod or a hand up when you want to move the slide forward, and hopefully I'll do my best to keep pace. Over to you, David, who's on mute. Yeah, thanks.
Great. Good morning, everybody. So CitrusHR, we've built an HR software platform, and we try to deliver joined up HR service. We're a big fan of the ecosystem that we're all in with connected apps and Xero, and we've got a QuickBooks integration launching any minute as well. But unlike a lot of app companies, we also have a professional services arm where we, something like 80% of our customers are our full HR support service customers who can talk to our team of consultants and in-house lawyers, backing those guys up. So we've been super busy trying to make sense of all this for months now, actually. And I think the last few days, things have calmed down a bit. There's a little bit more clarification just over the weekend. So I think hopefully I can be succinct now and talk about the government support that's around to help employers and some of the tips and tactics that we're advising people to use to get through this. These tough times. The biggest thing or support measure the government has introduced by a mile for employers is called the Job Retention Scheme. It's whereby you can furlough some number of your staff. That means that the government will pay up to 80% of their gross pay to a maximum of £2,500 per month. And that's a really good deal, right? That's exciting. Clearly, if you're a law firm and you have a lot of, or a tech company with a lot of people earning a lot more than that, it doesn't go all the way. But nevertheless, it's a really huge thing, and a huge gesture. And if you have a lot of people on less than 30k a year, then that government will grant will cover pretty much all of that. The good news is that the government will also pick up the employer's national insurance contribution and the employer's minimum pension contribution. So it's really, really very good from that point of view. Very much designed to help companies keep those employees employed and not make them redundant. So the theory is you should only use the scheme if the alternative would have been making people redundant. It's hard to prove, of course, but that is what the point of the scheme is. It applies to pretty much all employees. It absolutely does apply to directors, which is a common question we get asked, but it only applies to directors' PAYE earnings. So it will not cover any dividend earnings that you might have been paying yourself or your clients might have been paying themselves. That's a big deal for a lot of companies. Of course, a lot of one-man band director companies out there. And this will be a little bit of help, but not massive help for those guys. It also only applies to people who have been in work in their current employment since the 28th of February. For people that left your company after that date, you are now explicitly allowed to re-employ them. That guidance came out over the weekend, actually. So if you felt sorry for them or you wanted to put them back on the scheme, you could do that. We're urging a lot of caution about that, because why do they leave in the first place? And do you really want to have them back on your payroll after that? It may be that they acquire more rights, depending on how long they've been with you during this extra time. And you know, it may or may not work out well. So it may be a good thing to do and the right thing to do. Maybe you didn't want them to leave. Maybe you are then confident they would now stay. But I think it's worth a conversation and some thought. But that job retention scheme is certainly the biggest piece of government support for employers right now.
Thanks, David. Just whilst you're on job retention scheme, there's a couple of questions that have come through. Any implications around option schemes and EMIs to look for around furloughing?
Nothing that's been explicit. So the core premise of the scheme is that employees remain employed. So all other employment rights that would naturally accrue during that period of employment still continue to apply. I've just seen a question flash up about overtime. I'll come back to that. I am in the absence of anything explicitly saying otherwise, and there is nothing that says otherwise, employee rights to share options would continue to accrue. The bigger deal for more companies will be about holiday rights. This is quite controversial, but at the moment there is no language anywhere to say that holiday does not accrue. So people who take perhaps a couple of months off with this paid leave, essentially, will still accrue entitlement to paid holiday during that time. We have a number of customers who are irate about this and think this is obscene and wrong, and they are therefore taking a commercial decision to get an agreement with the employee not to have that happen as part of this. That is their risk and their view. I do sympathise with that view. I think it's sort of crazy to say, hey, have this time off, you're not allowed to work, don't do any work, but you still accrue extra holiday rights, so you can take that holiday. You know, if it was 3 months, you get a quarter of your year's holiday allowance to be there when you get back, which is really not what our companies will need when we pull out of this. We need all hands on deck to get going again. So I think that's a strange one, and I would welcome further government clarification on that. But for now, you have to assume that would apply. So overtime, that question just popped up. Overtime is murky, actually. I think the broadly it's okay. I think committed contractual overtime would be covered, but it is I think still slightly grey in terms of the detail there. Commission is the one that I think is particularly murky. So, and we've just had a little message flash up there. Compulsory commission is included, and I think that means contractual minimum commission levels. But generally commission that is not a compulsory number, and I think most commission schemes would not typically, in my experience, have a compulsory number, would actually not be included. So that is quite a big blow for some people. Obviously, it depends on how much commission makes up of your earnings and where that sits in relation to the £2,500 monthly maximum.
And David, just to clarify on that, another question was around tips. So presumably that would also not be covered in this state.
I think that must be right. I can come back to you if I will undertake to get a specific answer on that back to you. I don't know about tips on the top of my head. I'm sorry, but I will come back to you later. So
another question that's come in here from Steve. How will clients need to register for online PAYE individually to claim, or will we be able to claim through our agent portal where authorised?
In fact, the current guidance is that you have to have an online registration, but I think so many people use agency portals that must be right as well. I have not seen that explicitly, but I would be staggered if that were not the case. So I'm sure that will be the case. Otherwise, you'd be excluding a large portion of the company population, which is not the intention here.
Okay, we're getting a huge number of questions coming through, so I'll take two more. Salary sacrifice when furloughing, how would that work?
So essentially, it's unaffected. It carries on the same, depending on what it is. You'd expect those benefits just to carry on. The salary will be paid the same. Almost certainly, we're still waiting for guidance specifically, but almost certainly this salary will go through PAYE as it would normally, and the company will then reclaim. So you as an employer still have to pay out that money in the first place, and you then apply for a grant from HMRC, I think, that we will get that money back later. The expectation is that the first grants will be paid at the end of this month, April, in relation probably to March payments.
Great, okay. We're getting a huge number of very specific questions. So what I might suggest is we may end up having to do a bit of a Q&A session post this session and come back on email with some of these answers.
Really happy to do that.
They really are a lot. So
yeah,
of course,
all of these questions will be recorded, so we can make sure that we can address all of these afterwards.
There are a couple of bigger things I wouldn't mind covering. If I know we've got time, I'll just in 2 minutes quickly. One of the biggest flaws to the scheme, I believe, is that it only applies to people who are 100% furloughed. You cannot partially furlough somebody. And we have lots of companies who want to partially furlough staff because they need them to do some work. And we have a number of companies who are wanting to wing it and say, well, can I not just have them do a bit of work in the background? And officially the answer is no, you absolutely cannot do that. We have been lobbying the government to try and get that changed, but right now that has not been changed. So we are also advising companies to talk to their employees who they want to partially work through this period, but not wholly, where they can't afford to keep them on. And the alternative would be making them redundant. We have a lot of companies setting up reduced hours schemes, and the incentive for the employee to put up with this and earn less money and do less work is to keep their job at the end of this. And we're finding a lot of people understand how existential this issue could be to their employer, their company. And so a lot of companies are doing that as well. It's obviously much less good, and the government's giving no help at all to that situation currently, but it is good. It is another way through, if that's useful.
Thanks, David. How do the people listening on the call get information around these topics, and how do you engage accounting practices through CitrusHR?
So typically we have a lot of accounting practices as clients actually, but also we have a lot who refer business to us, and they're welcome to email us, contact us with clients who want to get involved, or with specific questions. Right now we're trying to be as helpful as we can be at this tough time. Email. We have a partnerships manager. That's probably the best, simple way in. That email is on our website, citrushr.com. There's also a lot of blog content we've got live. There's a lot more detailed content we publish on the website for customers, but and any of the accounting firms that are on our partner mailing list are getting a lot of emails that we're sending out with more specific information and support.
Cool. Thanks, David, for sharing. And clearly there's demand for your time, I'm sure, and services, which is great news. So yeah, thanks for sharing there. We're now going to move on. So next topic is looking at disputes and bad debts. So clearly cash being locked up in disputes or bad debts is also an opportunity to improve cash flow. So I'm going to hand over to Nick from Escalate to talk us through a bit about how disputes and bad debts are going at this time, and also solutions for yourselves and also your clients. Thanks, Nick.
Okay, thanks, Ollie, and good morning, everyone. I hope you're all managing to keep your spirits high despite the lockdown. as Ollie said, I'm going to sort of give you a few highlights as to the sort of recent legal developments which can impact on SME cash flows and try and make some sense of them for you. I'll put my hand up, Ollie, so you can change the screen. It's fair to say the legal market, like every other, is in a state of flux at the moment. What's happening, how long these changes are going to take place for, who really knows? I think what I can say is that there is a real balancing act to be had between, and this is what the courts and everybody are wrestling with at the moment, between the rights on the one hand of individuals, SME businesses who have legitimate claims, legitimate debts to pursue, which existed pre-COVID-19, and on the other hand, those businesses, otherwise good, healthy businesses, viable businesses, who've suddenly just been caught up within this sort of maelstrom of craziness, and are having short-term cash flow problems and liquidity issues, and it's ensuring that there's sort of a protection blanket put around those companies to help them through this tricky patch. So, the government have, some people say move quickly, others will say slowly, but they have responded to these business calls for protection, and just touched on furloughing, job retention. There's things like deferral of VAT, 3-month mortgage holidays, 3-month moratorium on commercial property evictions. And then what has been mooted is the changes to the insolvency rules, which it's thought will come through this month, certainly by the end of the month. And there are, again, it's just creating that breathing space, protective blanket around businesses to help them through. But 4 key areas which it's thought will be introduced, and that is a 3-month, 90-day moratorium on creditors being able to present petitions against businesses. Again, just to create breathing space, relaxation or an extension on the rules around sort of validation orders, or allowing businesses to order supplies, necessary supplies, to get them through the short-term difficulties that they're facing. Alongside that, protection for directors, so that a relaxation of wrongful trading provisions, so that they can make short-term funding applications. They can take the government emergency funds and so on, without the fear that they're suddenly then going to be looked at for trading whilst insolvent and so on. So just necessary and essential protections built in there, without sort of creating personal liability.
Just a quick question, just to unpack that moratorium on the, was it a winding up petition? So if what should our accountants say to their clients if someone is threatening them with their clients with a winding up petition, and they can't pay? What's the advice there?
Well, the key there is, and this is going to be the real battleground for lawyers, is that, of course, where you've got somebody that is, it can be demonstrated has hit the buffers as a result of COVID-19 and the fallout of that, then they will get the protection, they will get the support from the courts. On the other hand, what you've got is where there was a pre-existing state of insolvency, and you've got pre-existing claims that could be made. I think the courts, and certainly lawyers, will be working very hard to distinguish between those two scenarios and demonstrate to the court that actually we should be able to crack on here, because there was a pre-existing position of insolvency, and they shouldn't be allowed to kick the can down the road and use as a debtor's charter.
What would be indications of pre-existing insolvency? So obviously lack of cash in the bank account, but also, I guess, potential other supplier disputes going on at the same time.
Absolutely. In the same tone as it would do normally, it would be building that picture to show that, hold on a minute, here is a clear picture of an inability to pay their debts as they fell due pre-COVID-19. And that's, it is grey area. It's not to say that the courts are going to have an easy job of it, but that's where the lawyers are going to earn their trust in terms of being able to demonstrate that.
Yeah. Okay. And anything companies can do today to demonstrate that that their current impact is due to COVID-19? Like, is that looking at accounts and seeing what's changed in their revenue or something? Yeah.
Absolutely, and showing that suddenly that and don't get me wrong, there is probably going to be a lot of latitude given by the courts, and rightly so. I mean, I think the watchwords are going to be forbearance, tolerance, and so on. And lawyers will have a struggle on their hands, I think, in the current climate to demonstrate that that it was a pre-COVID problem. I think that it's going to be easier to demonstrate the flip side, that there are current cash flow problems, simply because everything's been turned upside down for everybody.
Yeah, thanks. Minesh raises a good point that obviously the courts being shut, so insolvency processes may, of course, not be happening. On what's your view there, and is there anything that an SME can do to kind of remove the urgency of a winding up petition that they get served and sort of delay things a bit?
Well, yeah, exactly. There's that competing bit, really, is that the courts aren't closed. Just to come back on what you just said there, the courts are open for business. They are working hard to try and ensure that there are, certainly in terms of, there's a sort of a triage as to emergency applications and so on, but courts are doing telephone hearings and so on. So the courts are open, and I think they will try and continue to be so. How quickly you can process petitions and otherwise court claims and so on, there inevitably are going to be delays in that process. Less court staff in buildings and so on being able there to process things. So that I think inevitably there will be the opportunity there to kick the can down the road a bit for debtors. But that's, as I say, that's the challenge, and that's the competing side of things that we've got to wrestle with.
Yeah, and if any tips to recommend how to kick that can down the road?
Yeah, I mean that's in a sense that's
the best way to.
That's going to be that's going to be the easy part of things. I think is as I say, because the fact is everything is turned upside down. It's not going to be difficult to demonstrate that things have caused immediate cash flow pressures. The harder job is on the other side of showing that those immediate cash flow issues that people will inevitably be able to show are not the actual true cause of the position, and that is going back and dissecting what was going on beforehand, and that'll be the as I say, the bigger challenge, but not impossible. I don't think. I think that there will be. But it's going to be a harder job, no two ways about it.
So, and a job, it sounds like, for the accountants that we have listening.
Yeah.
So clearly, you're seeing two sides of this coin. Obviously, we talked a bit about businesses being confronted with winding up petitions and the protection there. How about the other side of the fence? So where they've got clients who they need to recover debt from. Yeah.
Okay. So that's where, as I say, I think the measures that are being brought in are, I think everybody would say, that creating these comfort blankets and support and forbearance is sensible. The flip side is that it does create that uncertainty and that opportunity to kick the can down the road. But I think the bigger issue is, and this is the one that I think everybody should be very much aware of, is that it creates a risk of inertia. It creates that. If businesses are thinking, hold on a minute, there's this comfort blanket being put around everyone, everyone's been given time, everybody's going to be able to kick the can down the road, therefore, let's not bother. Let's not go after these debts. As I said before, we've got to have balance. There is, the fact of the matter, courts are open, enforcement is still possible, ADR is there. So businesses can go down the road of mediation. They're doing online Zoom mediations. You've got neutral evaluations. All those things are still available. And as I say, lawyers will be working hard to make sure that they demonstrate that pre-COVID-19 there are still, it is prevalent and that the debts existed before that. I think also perspective needs to be maintained. What we have here is a position whereby sort of cash flow was a problem before COVID-19. You've got UK SMEs. There's independent stats of the Legal Services Board and Zero, who said UK SMEs 131 billion. This is pre-COVID-19, was tied up in late payments, and that's a startling stat in itself. And secondly, UK SMEs were losing 40 billion by way of writing off debts through commercial disputes. So a big problem existed before, that is most definitely going to be heightened as a result of COVID-19. But flip that round and say, for accountants looking after their SMEs, looking at sort of added value and things that they can do to help out, getting businesses to focus now on those debts, getting their houses in order, doing their housekeeping, checking them out, making sure that those ones that are delinquent, they get after them, they communicate in a fair way and being sensible and balanced, but getting after them, doing it now, that by doing that, you remove those bits of delay that are avoidable. They're in your control. And then if there are delays in the court process now, you are at least ahead of the game of others in trying to get those, you get paid, because it's no two ways. It's true that who sort of jumps highest and shouts loudest gets paid first. So get on it now and get trying to pursue those claims. And that's where, as I say, accountants can really provide added value. And what I would say is find a lawyer that you can trust, because they do exist. They're out there.
Thanks, Nick. And so obviously a huge focus there on credit control and chasing up overdue invoices there. What happens if a client comes back and says they aren't paying or they can't pay? How can Escalate help in that scenario?
Well, Escalate can help because Escalate provides a fully contingent solution, which is you've got sort of funding and adverse cost insurance all wrapped in with a no win, no fee package. So with that, people who have a portfolio of debts can pursue that without the fear of any cost or the risk of losing, adverse costs if they lose. So that's where we're getting into a massive sales pitch, but Escalate is unique, and there's no other solution out there in the commercial dispute market at this moment in time.
And what sort of size debts does Escalate handle? Is it only for large debts, or does it go right down to smaller?
The whole range, upwards of £1,000, right the way up to multi-millions of pounds, and it's all based on a fixed fee out of the recoveries made.
Great, thanks, Nick, for sharing. So another great tool for the toolbox there. We've heard from Nick at Escalate there. So I'm just going to do a quick update on the lending side. So we've heard a bit around the employment side of things. We've heard from Escalate how to handle winding up petitions and that moratorium, plus also how to bring those claims through Escalate. So on the lending side, many of you may have already have heard updates from this, so I'll probably keep this pretty brief. Clearly, before credit markets, anything that is free money is obviously better. So prioritizing business grants through local authorities, the job retention program, deferring liabilities, which obviously is not necessarily free money, but it's free credit with HMRC, and I'm sure you've heard a lot about that, so I'm not going into too much details. We've got a COVID-19 hub on capitalise.com, accessible through the main bar. So I'll leave that there, but go straight on to two key areas. The first one then is looking at the lending market generally. So the lending market here, I'm meaning anything that's not CBILS. The lending market's obviously broadly split between the banks and the alternative lenders. So the banks broadly are operating as they have done in the past. So they always have had the most cautious underwriting criteria, looking a lot at secured lending. Dealing first then with the unsecured market, so those will be names that you recognise from the fintech community, which are mostly secured against personal guarantees. Clearly, they are in the slightly riskier end of lending. So we've seen the reactions there were probably quickest to look at stopping lending to certain of those high-risk sectors. So those high-risk sectors are things like retail, leisure, hospitality. Lending in those areas outside of CBILS is extremely challenging, to the point where no new applications are often being accepted into many of the lenders. So they're focusing on their existing clients and any additional borrowing requirements needed for those clients. Outside of those sectors, so sectors that have shown that they are still open for business, lending is happening. So that open for business piece is important. So one of the key things we're seeing is that lenders are requiring bank statements up to the current day. So not just the last 3 months bank statements, but actually, you know, yesterday's and hopefully today's bank statements, because that shows any material impact to the business that's happening from COVID-19. So areas where trading and revenues have dropped will want to be taken into account during the underwriting process. Even based on that, we're seeing offer amounts coming back to be slightly lower than they would otherwise have been in the past. So if you were looking for 100,000, maybe the offer comes back at 70 or 50,000. So that's also one thing to consider too. The other thing to consider is that the expiry dates of the offers that we're seeing through the platform are shorter. So previously there would be around 30 days, and at the moment they're kind of looking at 7 days to make a decision. So lending is still happening. It's happening in sectors that are not hardest hit. It's happening at slightly reduced amounts, and also the underwriting criteria is slightly higher. So there may be additional requirements asked of yourselves as accountants. So, for example, that key point there around the impact of COVID-19 to a business is really a key thing that's being asked, I think, at all levels. Obviously, at dispute level in the courts, in underwriting for lending, the market wants to understand if that business is going to keep on trading through this crisis. Dealing with the secured markets, so secured should really be working pretty well, and in most other crises it would work. So things like property, asset finance. The real reason it's probably a bit slow at the moment, in the sense that the decisions are taking a while, is just simply down to valuations. So, you know, clearly going to see a property is a key part of the secured underwriting process, and the surveyor to go out there and value it. So there's more logistical problems around secured. You know, innovation is trying its best to work around those, but of course, you know, things are taking time. So time is ticking with this, but certainly we're seeing offers going through, lending being drawn down across the board. Some lenders have said, you know, they cannot cope with the current volume, but that's not the majority of the market just yet. It's probably, you know, 25% of lenders, I'd think, are probably saying no to new applications at this point. Being a marketplace, you know, we've got 110 providers on the platform, so we try our best to keep on with that dynamic nature of the market and ensuring that we can keep the offers flowing. So that's the commercial market, should we say. Clearly, you know, the CBILS program that's been launched by the government, which sits on top of the EFG scheme from the British Business Bank. I'm not going to go too much detail around how this works. There's a lot of that available online. Really just talk a little bit about what we're seeing in the market. So clearly this is it's really a bank scheme. So by a bank scheme, it's on top of bank processes, because what we're looking at here is additional security to an existing loan product, loan or invoice finance facility or overdraft, whatever it might be. So what's happening here is the government is saying, we will underwrite the security of this loan in the event that the other methods of security are not able to provide repayment of the capital of this facility. So if you take an example where a loan has been taken out, a charge will likely be taken against assets in the business. Obviously, the concept of personal guarantees, we've heard at the end of last week, there'll be no personal guarantees up to £250,000, and the personal guarantees will be capped at 20% above £250,000. So personal guarantees are largely out of the equation now for this program. So there will be other security that is required for these products, most likely business assets, or something that can be secured against. The program requires the bank to take that security, which is why there is some lag in some of these products being written, because they're not simple PG-backed decisions where a business comes in, the business owner sign a personal guarantee, and the money gets issued. The banks are being required to securitize whatever they can as part of the process, and obviously part of that is to reduce the risk for the government, which is part of the old scheme. We'll see what's coming out. There may of course be changes to that, because clearly that is one aspect of this program, not being that fast to deliver funds. The other part, which was a bit of a delay and a bit of confusion at the beginning, was the banks having to offer other commercial products should a business qualify for those products. That piece has been removed as of last week, so you won't find businesses going in for a CBILS loan and getting offered a commercial overdraft or a loan which is not CBILS, so that's been removed. The other thing, of course, to mention is obviously the interest is variable, and the government will pay the interest for the first 12 months. We don't know specifically about when that will be from, but presumably from the date of drawdown, and they'll pay that interest to the bank. So the borrower will not have to pay any interest. They will have to keep on paying the repayments. So this is a really key part where if affordability is lacking, in the new CBILS state, where even a business with the loan is not being able to repay the principal over, say it's a 24-month loan, 180,000, then that's £7,500 a month of repayments. If a business gets to a point where they cannot make those repayments, of course the loan will go into default. So banks will only be able to write loans that businesses can afford to repay. So there is a balance there. We are seeing loans happen. We had approximately 250 applications through Capitalise into CBILS. We have around about 100 of those with the right lenders, and we are seeing handfuls and now per day coming through with offers. Offers are coming back basically what you'd expect from a bank. So 3.1, 4, 5, 6%. Which does mean that they are really only suitable at this point for bank level borrowers. We expect to see new providers come into this program. One point of friction, probably bizarrely or perversely maybe, is removal of the personal guarantees probably has removed the opportunity for other lenders to come into the program, because without personal guarantee, they're forced into a different underwriting model where they have to securitize against assets of the business rather than a personal guarantee. So the political pressure to remove personal guarantees may actually have prevented more providers coming to the market. So I think we're going to see more changes. We have in terms of the process, we have a flow through Capitalise for any accounting firms using Capitalise. It's off the dashboard there. That takes you into a community of the lenders that we have. It's around about 9 now, I think, that offer CBILS. The banks are only, or they are prioritising, should I say, those businesses who bank with them. So if you're with Barclays, Lloyds, NatWest, Santander, HSBC, for your banking, then that would be where to go for the CBILS loans, and we can facilitate direct access to the team there. Some banks are better than others, unfortunately, as is often the case. The response times are quicker. I think broadly what we're seeing is those that have good digital processes and have good online banking, for example, you can tend to expect those probably have got better processes, and so we're seeing faster responses there. If a business does get a decline from their main bank, then there's an opportunity to go to other banks as well, and again we can facilitate that. So a few questions coming through. So one point here is many clients are telling me that the banks are requesting so much information that by the time they go through the process, the crisis will be gone. This is a bank process, and they are requesting a lot of information. Again, maybe that will get reviewed, but we've got on our sort of how CBILS works page a list of the questions that get asked, and also a list of documents that get requested typically. So that is more than you'd expect from a kind of unsecured market from the years gone by, but it is what is required at this point. The reason that banks are doing this is because the government won't necessarily pay the money back if in the case of a default. So firstly, a bank has to go through the whole liquidation process to be able to recover the funds from the government. That could be 12 months of recovery process without the personal guarantee in place before a business is wound up. It takes a long time to do that. Also, if government in the existing program is deemed that loan should not have been written, then they may not repay the capital to the banks. So it's not risk-free lending this at this point. And I think one thing I would say there is on the level of information being required, business owners really will struggle to get this information together. All the more important for accountants to be there to help their clients. So we're seeing that accountant-led introductions through Capitalise are succeeding much better.
I can send through that document request that we've just created. Ollie, would that be sort of helpful to
yeah,
show?
we can follow up. Yeah, exactly. That would be good follow up. CBILS is a 12-month interest free, but is there also a repayment holiday? Not that I've seen any repayment holidays on CBILS. Again, just going back to the point around affordability and to make sure that the future incomes will be able to repay the capital is really important.
Ollie, I hope this is helpful. We've gathered from a couple of customers we've spoken to that they've been offered 6-month repayment holidays as a standard, and we were told that was part of the scheme. But
okay, cool.
Not sure. You know more that
I'm
than me.
I'm a little bit further away from the actual offers of this, but yeah, thanks for sharing, David. That's great. If someone has been rejected from a loan by their bank, what's the likelihood of them getting a loan elsewhere? That's actually an important point. What we're recommending is that because the scheme is a bank-led process, which banks are extremely good at managing risk, but as a result, they do take their time, and the banks are trying hard to make this work. We're recommending to run in parallel, a search into the market for alternatives at the same time. So, the worst case scenario is a slow no, where you go through one process and that one process ends up with a decline. So running things in parallel is super important. That's a really key thesis of Capitalise and the marketplace approach that we've taken here, is to run things in parallel. So at least you've got some choice and some options ahead of you. Are you finding funding offers from the Big Four or deals offers quicker, more advantageous from the second tier lenders? There aren't that many second tier lenders in CBILS right now. It's really banks at this point, and then a lot of local LEPs, funders who have been set up by councils and local authorities, most of which have been maxed out on their ability to lend. So really the banks are the key people in this program at the moment. Cool, thanks. Well, I won't take up any more time, so we'll move on now to Ainsley. So we've heard 3 different ways to help businesses, from the HR perspective from Citrus and David, from Nick and Escalate on the dispute side, and I've shared a bit around the credit markets from Capitalise's perspective. So much information. Ainsley, how do we handle this as accountants?
Yeah, thanks, Ollie. So probably a little bit of background might be helpful for those who might be thinking, why the hell am I speaking to accounting firms about overwhelm and how to deal with it and how to communicate more effectively with their clients. So having left the Big Four, I actually built my own accounting firm. It specialized in business advisory and support services for high growth entrepreneurs. And I did that by transforming an existing compliance-based practice. Now, we won a huge number of awards like Best Medium-Sized Practice in the UK, Most Innovative Accounting Firm, Best Advisors to Small Business in the UK. And I sold that practice last year. Now, I've concentrated since on clarity. So together with my fellow founder, Stephen Brigginshaw, who's incidentally has a similar background to me, we've actually built a platform that leverages technology, but understands the importance of systems and processes required to actually build a better accounting firm. And so we help accounting firms either introduce business advisory services or actually scale advisory services if they're offering it, effectively giving 100% of their clients access to business advisory supports from most of the team. So, I also do some mentoring for a small number of accounting firms since I left doing that for businesses. So I have a kind of a really good understanding of what's going on in the accounting market and what accountants are actually suffering at the moment. And I think there's been a massive complete overwhelm in the accounting world. So for the last couple of weeks, they've been firefighting, dealing with huge numbers of inflow inquiries from clients with urgent requests on obviously CBILS, on the employer retention schemes, on all the nitty gritty, and you know, bombarding the accountants to be able to deal with that. And I think also accountants have been proactively trying to chase their other clients to be able to speak to them as well. And I think this has, and all those calls, by the way, are generating a vast amount of work. So it is, I think, a sense of complete overwhelm at the moment, plus the fact that they're being told they need to speak to all their clients and they're wondering how the heck Am I actually going to get to speak to the rest of my clients that probably the ones that haven't been in touch desperately need my help more than anybody else? So I think I really do sympathize and empathize with accountants at the moment. I think the my first piece of advice is actually to fit your own oxygen mask first. So as you know, on a plane, you're told, rather than help anybody else first, you need to fit your own oxygen mask first. So I think that's absolutely critical. I think you need to take a step back. You need to consider yourself, your own mental health, your own well-being, that of your family and of your team, and then of your clients. There's no point struggling and having the accounting firm, you know, on its knees and not being able to help small business owners. So I do think it's actually look after your own house first. And you know, that's critically important. So take a step back, sort your own house in order first, and then help others. And probably the only way you're going to really do that is by properly mobilizing the team. And I'll come on to that in a little bit. So if you want to skip forward, Ollie, I think that the whole thing about this overwhelm is that there's so much happening. We need to focus on what we can actually control, what's in our power to control, and forget everything else. There's so much in the media and so much happening around that we are going to have to be very good now at filtering through that information and focusing on what's important for us to be able to speak to our clients. And I think we also need to talk to our clients and take them through this process as well. I think clients are ranting, are angry at the moment. I think we need to, I suppose, let them have that vent, but I do think we need to keep them on track and keep them on focus. So when we're having meetings, it's very important that we have agendas and try and stick to the agenda whilst acknowledging the frustration and anger that's out there. Because it's not really going to help at the moment. We need to actually find solutions, not get overly into the you know, what's really you know, politics and everything else. I also think that as accountants, sometimes we tend to focus a little bit on the nitty-gritty. And I think sometimes we need to take a step back from that. Now, we've heard from, you know, 3 experts on this call. You've seen the number of questions that are coming through on furlough. I don't think as an accountant, you can spend the time dealing with that minutia. Maybe for your own firm and for queries that come in from your own firm, you need to be engaging with Citrus and helping and getting Citrus to do that for your own firm, and particularly for your clients. I don't think you can be handling that volume of queries and that nitty-gritty and all those little intricacies that are so tricky. And you know, there's a lot of legal stuff that's going on here as well, and you need to be really careful that you don't trip over here. So I think you should be engaging and helping your clients engage with specialists who can actually take that off your hands, because this is about now focusing on what clients really, really need. It's about getting to speak to all your clients. It's about triaging them, understanding which ones are critical, which are serious, and which are stable for now, and dealing with them in that order, and actually focusing on what work you need to be doing now and what work you can be doing in the future. What work can be put on hold? Because if you think about it, how many clients have you got multiplied by a 30-minute conversation with each of them, multiplied by potentially doing a 3-way projection for most of them, which might, you know, even leveraging technology is going to take you 2 hours probably. So if you add 2.5, 3 hours for that, for almost all your clients, multiply it by your client base, then deduct how many you've actually spoken to. I mean, it's a colossal amount of work ahead. So we need to be really careful on what we're doing for our clients. We need to be focused, and we need to have an action plan in place for our own team and mobilize the troops to be able to help us do this. So if you can skip on to the next one, Ollie, this is really about us. And I think it's probably talking about all the things we've just said there. This is time for you to step up as a leader in your accounting firm, to actually lead from the front and mobilize the troops. You will not be able to do this unless you get your entire firm working in the same direction. And so that's explaining the challenges to them and actually getting them to help you in proactively contacting all those clients and getting the work done that needs to be done, whilst understanding what work can be put on hold. Now, clearly payroll is something that's going to become most important going forward. So you can't put that on hold. So the VAT returns still have to be done. Accounts might be able to be put on hold for 3 months or 4 months, but ultimately, if you're looking for a loan, you're probably going to need to file those, and you've got to do all this extra work on top. So it's critical that the work that you can get somebody else to do, like Escalate and like Citrus and like Capitalise, then you should definitely be utilizing that, and you should be using getting your clients to utilize that information source and the helplines and all the various things that are available, rather than you having to deal with that. So I think that's critical. But I think that's a key point. We have to mobilize the team. And sometimes as leaders in accounting firms, we take it all on ourselves, and we're probably dealing with too much, and we're not delegating properly. And this is about us focusing on the 4%. So you've heard about the 80-20 rule. Well, if you go 80% of that 20%, or 20% of that 20% even, then you're looking at a much lower percentage of tasks that you should actually be focusing on that are helping your firm and driving forward and helping your clients at the same time. Okay, Ollie, next slide, probably. I'm sorry, I can come across as dictatorial. I am actually really passionate. So this is passion rather than dictating to you, I hope. And again, as accountants, like if you think about it, we're used to knowing the correct debits and credits, understanding how to create a set of accounts pretty accurately, even with audit exemptions and audit thresholds. True and fair is pretty embedded in our brain. And we've also, from a tax perspective, are expected to know everything down to the T. Sometimes good enough is good enough. And I think that is definitely one of these times. So we need to get stuff done. And good enough can be good enough in certain circumstances. So perhaps in the past, while we might have been creating a three-way projection, for example, using Excel, we won't have the time to do that for all of our clients. Yes, sure, for those that need bespoke reporting, and maybe for our larger clients, that's okay to do that. But for the bulk of our clients, we're going to need to have to leverage technology to be able to do that. And again, sometimes good enough is good enough. And even with our own advice and dealing with the queries that are coming in, again, let's get the team involved, because, let's empower them. We've employed them for a reason. Let's get them involved, and let's get them actually helping. And when I'm saying the team, loads of people are saying to me, yeah, we're getting the team involved, but that's their senior team. This is a time to get everybody in the accounting firm involved and everybody mobilized to be able to help your clients. Now, at Clarity, we've built a COVID care call system. It's free to use for whoever wants it. Complete step-by-step process with scripts and agendas and emails and action plans. And so it's all in there for you to be able to mobilize your troops if you want. And I'm sure we'll get that out to you. But this is really a time when I think good enough is good enough sometimes. And we just need to sometimes not work for perfection, but just get stuff done.
Yeah,
and
we'll make sure we share that as a follow-up piece, if that's okay with you, Ainsley.
Yeah, absolutely.
The call guide. Great. Well, thanks, guys. I think we're almost coming to a close. Ainsley, anything else you can say around charging for services at this difficult time?
Yeah. So that's a really, really good point, Ollie. We have to protect our own firm. So we need to be making sure that our own firm stands up and that we're able to pay our team. And so I think it's about having upfront conversations with clients. This is not the time to be just winging it and hoping that you can send a bill and get it paid. This is about having frank conversations upfront. Now, sometimes we will need to do work that maybe we're going to defer, or maybe we're going to gift, or maybe we're going to take commission from people that we've never taken commission for in lieu of fees going forward. But ultimately, we need to be talking to our clients about saying, I need to do these things for you. I need to pay my team to be able to do that. And so I'm still going to need to get paid. Now, there are lots of ways that we can do this. We can get invoice financing. We can look at spreading the payments. We don't have to be cruel about this, and it's not being cruel, and it's not capitalizing on people when they're down. This is actually saying, as a firm, we still need to survive. And so we need to do what's right for us. So I think it's critical that whilst we might give a free 30-minute call to everybody, thereafter, we're going to have frank conversations about charging.
Well, one thing I love is the concept of never let a good crisis go to waste. And this may be an opportunity to start to move your clients into direct debits. And obviously that will protect you now, but also into the future as well, with keeping that revenue recurring rather than big lumps at the end of the year. So we're running out of time, and I'm sure everybody's got things in places to go to. So thank you everybody for sharing. We still have quite a few questions that we haven't answered, so apologies to everybody who has asked questions that we haven't come back to, but we will come back on email on those. And David, a lot of those have come, so on the flow process. So clearly there's lots of questions around that. And so, I think definitely do look at Citrus, look at Clarity, look at Escalate. All these 3 products are hugely useful to be in the toolkit, both for yourselves as accounting firms and also for your clients too. So thank you everybody for joining, and thanks for the speakers for joining too and sharing your insights.
Just on that
Thanks
note,
for organising.
I'm going to take a thank you there. Just on that note, if anyone immediately wants a call back from Capitalise, I'm just going to chuck a poll in here. And I'm also going to put Nick and Ainsley and David on the spot. And hopefully you'll be available. I think we should run just a question answer session, perhaps for 1 hour, depending on your diary. So if I'm getting a nod from David, how about you, Nick? Do you think you can, and Ainsley?
Yeah, that's fine.
Great. So I think that would be, I think there's so many questions. We'll endeavour to answer them all over email, but I think we also can run a session whereby we can get more of those questions there. So feel free to keep sharing those questions through. I'll keep this open for the next few minutes as well. But thank you so much, everyone. I echo Ollie's sentiments, and I think we've had a lot of feedback from people saying, it's been really helpful, and thanks for that feedback. I think there's so many, as Ainsley said, so many niche questions as well, and I guess we're all doing our best to help provide and provide some comfort to our clients and probably our friends as well. So thank you very much, Nick, David, Ainsley, Ollie. It's been a pleasure.
Been a pleasure. Thank you.
As always. Thank you.
Look forward to that cafe bread in due course.
Absolutely.
Talk soon, guys. Thank you.
Okay, cheers. Thanks all.
Thanks.
Bye.
Cheers.